Let's start. Are you good to go? Good morning, Tuesday. Thank you for coming in. And welcome to Ficus virtual pitching session. Hello, my name is Cynthia. Thank you for joining us in this webinar. I'm the Academy Manager in pitchIN, and I'm your host for this morning. If this is your first time tuning into our session, pitchIN is Malaysia's leading equity crowdfunding platform. We are also a registered market operator with the Securities Commission of Malaysia. pitchIN has successfully helped startups collectively raise more than 276 million ringgit to date, and that is the most among all of the ECF platforms in Malaysia. So equity crowdfunding gives investors the opportunity to invest in fast-growing companies that have high potential for growth, which means the public, i.e. the retail investors, can now invest alongside angel and sophisticated investors. Right? Deals like these were not accessible to the public prior to the introduction of equity crowdfunding platforms. So we at pitchIN regularly run these webinars to allow businesses to present their investment pitch and to give you the opportunity to ask them any questions that can help you with your investment decisions. Today, we have Ficus to give their 10 minutes presentation, followed by a Q&A session after that. Ficus Capital is a registered venture capital management company with the Securities Commission of Malaysia, founded by a group of accomplished professionals and entrepreneurs who have accumulated over 70 years of experience in the fields of banking, investment, technology, and entrepreneurship. So let's welcome Rina to present what Ficus Capital is about. Yeah.
Hello, good morning. Thank you, Cynthia and pitchIN team. I see some familiar names there. Hi, Celia, my good friend. So since we have 10 minutes, I'll just run through very quickly what Ficus is. I'm sure most of you are familiar with crowdfunding, but this is probably the first or the second time a venture capital fund actually raised from crowdfunding. We're pretty new in the industry. This is our first fund, although some of my team members, including myself, we have actually run other funds in Singapore. For me, Ficus is actually world first ESGI-driven VC company. Why we have such team? Because we feel that most of the companies or startups that fail, one of the key component or driving factor is really on the governance side of startups. You probably will think that it is not important for startup to embrace these principles because for startup is only economic survivals. But we feel that it is important for the startup to actually embrace this at early stage. Simple reason, because when we invest in startup, we want them to grow and we want them to actually go on to raise the right money from the bigger guys, which is probably the PEs. And even if you want to do a trade sales to big conglomerates, the buyers are looking at this fundamental governance factors as well. On Ficus partners, as in all startups, when you want to invest, you look at the partners. So for us, that is, to me, is a very good combination because myself, I come from an angel investor background. I've been investing since 2006. When I say investment, it doesn't mean that I work for someone, but I actually invest my own money. So that's a key differentiator between someone who works for a VC fund versus and someone who actually invests their own money. So I wear both hats, but today I wear my hat as a VC. Our firm is led by a very experienced banker, Mr. Azamin, who was leading some of the big banks in Malaysia. So his last position before he retired and joined Ficus was the Group CEO of Maybank Asset Management. And my partner, Hidayat, who will join us shortly, Hidayat is actually well versed in Islamic finance, having worked in PNB and also the Islamic Bank in Jeddah as well. So many people would ask, what are your track records? So Ficus fee is our first fund. So as a first fund, of course, we have not had any track record, but what we are showing to you guys is actually our individual track record, right? So some of these companies are still being listed. One of it is Holista Caltech. That's my personal investment in my first fund. We did a RTO. So Holista Caltech is still listed. Time Medical, I've exited earlier, but is actually about to list in Hong Kong Stock Exchange. Next, please. So why Ficus? I guess I summarized it. In the interest of time, I won't be reading this. We have a stellar track record, and I must emphasize that this is personal track record. But I'll show you later that the two investments that we have actually invested with this fund, and why we said a track record individually is important. Exposure and experience. When you invest in startup, it's important for the team members to be able to smell the early stage startup. So in our team, we basically have this principle that we like to meet any startups, even we are not in the position to invest yet, because sometimes it's about timing. But we always say that 30 minutes spent with the potential startup, hopefully our comments and criticism, they will take it back and they will actually enhance their pitching deck. And one day when they're ready and when we're ready, we can basically strike a deal. Eye on Southeast Asia, this comes with the vast experience of the team members working in Southeast Asia. So I'm Malaysian, but I've been based in Singapore for the last 20 years, and my team members as well, vast experience in the ASEAN industry. No matter how good a startup is, whether they are from Malaysia, Indonesia, or even Singapore, the ability to scale, at least around this region, is very important for any investors. If you take one of the countries and say you do well, probably, yes, you can play the defense strategy and do well, for example, in Indonesia, but you cannot stop others from coming into your territory. So a good foothold in Asia, Southeast Asia, is very crucial for the company. Of course, we are very thankful for the government support. In fact, Ficus, we have our anchor investors, MAVCAP, and a few high net worth individuals. Hopefully, one of you guys will be our LP as well. But we feel that Malaysia, in fact, in ASEAN countries, there are limited people who actually understood what really angel investment is, and also VC. So we are glad that we are able to partner pitchIN to basically educate more professionals to actually consider alternative investments such as VC investment. Of course, it's an embedded ESG and Islamic values. When we say in Islamic values, it basically means that we don't invest in things that is haram, but our focus is on tech. So most of the tech companies is considered Sharia compliant unless proven otherwise. For example, gaming would be a gray area, but we have the Sharia compliant advisors to actually advise us on this. Next, please. So the focus, when we do our due diligence, these are the 4 Ps that we focus on. Of course, as early stage, the people, the driver of the company is really important, and all business exists to make profit. So as a VC, our number 1 KPI is to return, the investment to our LPs, right? Of course, in doing so, if we can do something good to the planet, that will be like an ideal situation. And then the last P is actually on principles, Sharia principles in terms of the investment and the structuring. Next. So it's a Southeast Asia fund. So as MAVCAP is our anchor investor, there will be some nation building factors. So 50% of the fund will be invested in a Malaysian company, but we do have some flexibility in the case where if there is a good technology company from other countries, but they would like to set up a base in Malaysia, we do have that flexibility to go back to our advisory board and IC members to actually seek their approval for that. So 50% is Southeast ASEAN countries, 50% is Malaysia focus. Next. So this is actually the fund terms, very similar to most VCs. The fund tenure is 7 years, plus the additional 2 years. 2 years in case we are not able to exit. Hopefully, we will not have to, exercise that 2 years. For first 4 years of the fund is always investment, but sometimes you have got a good deal and people want to buy you at year 3. Of course, we will then consider and work with the investee company. So it's about time and the right price. Year 4 onwards is our divestment period. So we will be working very hard. The team will be working very hard to actually try to plan exit for the investee companies. The expected return, quite standard, is 12%, and then target return is 20%. We had some comments that said that 20% is actually very low, but if you look at all the VCs, in Southeast Asia, the top tier would probably return about 25 to 28%, and then most are actually 20% and below. It's a Malaysia domicile fund, so we're registered with SC. Is actually in ringgit, and then the fee, which I think one of the question that always come out from potential investors is like, why should I give you guys 2% of management fees? In fact, for a small fund like this, 2% is not going to make the fund managers rich, because you can calculate how much we will be getting or the team will be getting. For most fund managers, our motivation is really the upside or the carried interest. So we will work very hard to actually secure a good deal, because a good exit makes all of us happy. So 2%, I will run through very quickly how a life of a VC is, in order to justify why we should get the 2% and the 20% carried interest. Next, please. So this one basically is the fund life. So we are now in 2023, so we have started investing at fundraising at the same time. Our fund, we have done our first close, so the second close will be September this year. And then while we are fundraising, we have already invested. So there are some VCs or some fund managers who basically wait until they close the fund before they start to invest. We chose to take a different path. We have been socializing with some of the startups just because of our background. We didn't have to start from scratch. So we have a good connection with the investors, which is the LPs, as well as a good reach to the potential investee company is important. So good relationship for both sides actually makes the VC life a bit easier. All right, so next, please. This is the sectors and the stages that we invest in. Of course, mostly is tech companies, but we do have some preference in terms of the pillars, logistic, green tech, e-commerce. But I would say e-commerce is very saturated. Most e-commerce companies don't really make good money. Fintech is getting a bit difficult because of the regulatory and also the cybersecurity compliance. Healthcare, big data, as well as edutech. So recently we invested in Assembler, is a mix between edutech and also big data. The stages that we go in, I think sweet spot for us will be seed and pre-series A, especially in Malaysia. Then if we go to other countries like Indonesia, mostly the companies, the early stage companies are snapped up by their local VCs already. but sometimes you pay a premium for lower risk. So that's what we do. So there are two companies that we already invested in. They are actually at the seed and pre-series A. For VCs, we are not able to invest in public listed shares, but however, if the company is going for IPO, we can do a follow-on, but we have to exit because in our constitution, we're not supposed to hold publicly traded shares. So these are the sectors, but of course, these are just the guidelines. We do consider if there's an opportunistic investment opportunities that comes along the way. Next. Okay, so this is actually a tedious process that we go through with our team. No rocket science. It really depends on how hardworking the VCs are. If you're investing 100,000 in every deal, I don't think you need to go through this tedious process because it's you just like going to putting a bet in everybody. So definitely there will be a winner. But because our fund size is small, we need to do extra hard work. So we have pitching weekly. So my team will actually meet with startups and they will actually go through the initial screening. And then we have what we call Ficus Friday, where we filter those that are aligned with our investment strategy, the team, and also the stage at which they want to raise. Usually Hidayat, myself, will be in fact Ficus Friday. If we're satisfied with the basic things that we're looking for, then we have more discovery session, that's step 3. We will also put them through a list of questionnaires, basically to get to know the founding team a little better, besides looking at the financials. Once we have done that, we will then prepare an investment note. The preparation of investment note takes a lot of time because it's like the fund managers writing a thesis and trying to justify to our investment committee why we should invest in company A instead of company B. So once we have done that, it's about 50 pages, and then we present to the investment committee, which is represented by the MAFCAP and our chairman and also a third-party individual. So the fund managers are not involved, so there will be no conflict of interest in there. And then once the investment committee deliberate, usually it's not a straight yes. It will come out with a condition precedent is too expensive, is too risky, and then they may probably just reject it totally. But as fund managers, it's our job to justify why we should, and why sometimes we should not, or keep KIV it. Right. Once this is approval, so once approval is granted, we will then go on to issue the term sheet. Now, term sheet is just a intention to invest based on subject to due diligence. So due diligence could take anytime from 1 month to 3 months, depending on how complex it is. If it's just a pure e-commerce company without IP, without trademark, it will probably be easier. But if you're looking at deep tech companies where you need technical due diligence, you need to spend more time on that. Once the due diligence is completed, we will actually do the preparation of legal agreement, and then the final step before we actually can disperse is actually the shariah pronouncement, in where we actually identify the gap. Tech companies are usually okay with shariah, but for example, gaming, it will probably raise some eyebrows. So we will need the guidelines from the shariah experts on this. And of course, step 10 is the signing of disbursement. So for VCs, normally when you hear companies raising tens of millions, there are some VCs who disperse everything, but most of the time disbursements from VCs come in stages. Just to secure our money, and our ILP's money, it comes in stages where we give condition precedence to the startup founders, right? So you have to perhaps achieve a milestone before we give you the next tranche of money. Next. Okay, so post-investment, I think is equally important. Getting a good deal is important. Monitoring and maintaining it so that it did not die is important. So post-investment, we take quite an active role, especially the first few months when we get on board. Firstly, because we have to do reporting to our LPs, to people like MAVCAP. So we take an active role in monitoring and helping these startups. We don't go in and say, what you do every day, but we collectively agree on a strategy house where we will help keep track on their deliverables. So post-monitoring phase is actually a little bit more tedious because you constantly have to take care of the baby until they are ready to be passed on to another buyer, which is the divestment phase. Next. Okay, so I will share two investments that we have made. One is Eclimo. Eclimo, as you know, is in the EV industry. The investment amount is 2 million. As of today, since our investment, we have actually already have an upside on paper. Assembler is our recent investment. Is actually a Bandung-based company, but Singapore-registered company. We are the first equity investors because they were all basically the early investors were all convertible note. These two companies, very briefly, I will perhaps share why we invest in it. Of course, Eclimo is in the EV space, is in green tech. The reason why we chose Eclimo is because there is a triple bottom line, revenue model. Eclimo's founders have been in the battery industry for more than 20 years. So Dr. Dennis has listed his own battery company in early 2000. In the EV industry, having a strong relationship with the suppliers is very crucial. Secondly, we don't invest in ideas. If you're familiar with this industry, there are many EV startup companies that is trying to produce a motorcycle, raising a lot of money. So we feel that a small fund like us, we don't have hundreds of millions to dump into ideas. So we chose this one where the motorcycles are already on the road, approved by JPJ, and they have a patent actually on their battery management system. The battery management system is non-spot welded that actually gives the battery a second life. So there will be revenue extension after you have used the battery for 3-5 years. Right? If you guys are interested to know more about this company, we're happy to have a separate conversation. Assembler is, if you probably have known of Canva, one of the unicorns that everybody in the tech space knows. Assembler allows individuals like you and me to actually create AR and VR objects with no prior coding. You don't even need a very heavy specs laptop. It works perfectly well on the browser. They've got about 2 million downloads on their apps, and currently a lot of educators are using it to create lesson plans, especially for kids, because we want to invest in companies that has obviously good financial return, but we feel the Assembler is in line with our ESGI concept. It is helping to transform education for children, and allow us to basically get into the AR VR world or the Web3 world, without really being a geek, right? So these are the two that we have invested in. I believe we will be sharing some of our pipelines as well, and of course these are confidential to only potential investors. Next, please. So I've already explained about Eclimo. So the battery pack that you see here is actually batteries harvested from the motorbike, because the motorbike has about 560 batteries, and because they are non-spot welded, Aclimo can take out the batteries and then refurbish it to make a battery pack. So imagine we're leasing now to, let's say, big corporations. So we just had a flag off with Post Malaysia. After 3 years, because it's leasing, we have to make sure that we provide tip-top condition of bikes to our clients. So we can actually take back the batteries, repurpose it for a battery pack, because as like in phones, right, your battery don't deplete until 0. So it's maybe 70% left. Not good enough for a motorcycle on the road, but it's good enough to be a battery. So we don't send the lithium battery to the recycling plant. That's where second life comes in. So some of the clients that we have, Gentari's cute purple bike is ours, and recently Post Malaysia as well is our client. Next, please. So this is the assembler. We can send more information about the company if you're interested. Next, please. Deal pipeline, Keto Care, we are actually doing due diligence on it. It's actually a platform for nannies. The reason why we invest in this, we are looking at this is because the founder is really passionate about this space. It also creates jobs for single mothers. It's a care industry, whether it is a elderly care or children's care, is a growing industry. Funded by working adults, you know. So when you're working, you basically have two ways to spend money. One is the elderly care for parents, grandparents, and then of course one is for kids. It's basically very scalable. So we are actually doing final stages of due diligence. And then we have Turnkey. Turnkey is actually a ESG monitoring platform. They have got really good clienteles, ranging from all the big PEs to some of the Malaysian companies that they call clients are Munchies, Nirvana, QSR. Simplify is actually a internet sharing app. Simply put it, it will be a Airbnb of Wi-Fi. Gush is actually a Singapore IP company. They actually spun off from NUS, and they are in actually sustainable building materials. Morpheus Lab is actually a low-code development platform. Everybody is into Web3 and Metaverse, but to really go into that space, even for developers, is pretty challenging. So Morpheus Lab is like a platform that allows the tech guys to actually quickly jump into Web3 without much investments in time. AdZapper is actually pretty new company here. We are still in the discovery session. They basically uses existing platform, which is in their own terms, not leverage, which is a WhatsApp advertising. Trite is actually a similar company like Beam. If you have tried these e-trike scooters and all this, they are actually doing very well in during pandemics. So we have actually recently spoken to them. Quite an interesting character, and I'm glad that the founder mentioned that he was trying to pitch to me about 4 years ago, but did not get a reply from me, because at that time it was just a PowerPoint idea. So I recall telling him that it was just too early, and the market wasn't really ready for that. Right? And then Saya Jual is actually also the company that we are actively engaging. It is really good platform for managing stockists. As you know, Malaysia, we have got many entrepreneurs who actually sell through Instagram and all this. And one of the things as a brand owner is basically managing your resellers or your stockists, which I don't see many platforms that's able to do that, except for big companies like what do you call that? The big MLM companies. So Saya Jual is, I'm glad is a Malaysian localized version that allows brand, even if you're a small brand, you want to increase your stockists and manage them professionally, is a very good CRM. So these are the ones in discovery stage right now. Next. So I remember I said, one of the reasons why people ask, why do you pay a fund manager to manage your money? Few reasons. We are professionals, so we do this day in and day out. Secondly, because we are VCs and everybody knows that, or treat us like an ATM. So everybody send their deck to us. You can, of course, invest directly as an angel investors. You can even join angel investment group like Malaysia. We have MBAN to actually invest in companies. If you have time to value add and to manage them directly, I actually encourage that, because without angel investments, VC will not have a good pipelines. So deal sourcing, we actually look at more Malaysian deals because of the constitution. 50% have to be invested in Malaysia, but we also, because of the network, we have a lot more deal pipelines from these countries, especially Singapore, Indonesia, and Philippines, where I have better connections. The type of companies we look at, you will notice an odd number of fintech companies. There are so many fintech companies across between a wallet to gateways to anything that has a money transactions. Strangely, people call it fintech, right? So these are the companies that we look at. We have actually looked at, since the day we started, more than 300 companies across Southeast Asia. And we do a lot of work to actually pick, our potential investee company. Even if we pick that, we still have to get the investment committees not to invest in, right? Next. Okay, I think picking a good company is step one. Step two, of course, is the mentoring or post-investment, how we as active fund managers help them to grow, to scale, or to actually look at their business model. Sometimes when you invest in the company, it pivots. So you as a fund manager and investor need to also acknowledge that the business plan is alive. It is listening to the macro and the micro part of it. But we have established, or the team has established, a very good network based on our past experience. So Asia CEO is a global network of CEOs. I'm the first investor personally in this network some 5 years ago, is based out of Hong Kong. Maybe some of you are also our members. We're a non-profit, but we get a lot of knowledge among the CEOs. Of course, we have very good support from the local government like MDEC, and we partner with universities as well, because one of the key reasons why we started in Malaysia is, of course, to help Malaysian IPs get commercialized as well. Okay, so these are some of the networks that we have in our platform that actually is one of the factors where the startups, when they decide which VC or which investors to go to. Nowadays, startups are also very smart. While we can pick who to invest in, they can also pick the investors that they want. And I think it should be a symbiosis relationship for this. Next. Okay, so these are some of the news. We recently signed a MOU with INSIF University to basically launch a white paper on ESGI framework. While many question us why startups needs to embrace ESGI, we feel that if we get them to embrace it and they're able to integrate this in part of their business strategy, it will give them a better leverage when they're ready to raise big money. As you all know, all the startup failed. I think in my opinion, it doesn't represent most people's opinion, is really the governance part of it. Tech companies are not so concerned about the environment, but for me, over many years, while I can detect all the red flags, we want to be fair to the startups, that we are telling them we are evaluating you based on these data points, right? So the ESGI part of it, so that we have a clear expectations. All right, next. Okay, so on the micro fund campaign, Hidayat, can I pass it to you?
Yes, sure. Thank you,
So
Rina.
my colleague Hidayat will run through with you the micro campaign that we are doing with pitchIN. Thank you.
Okay, thank you, Rina. I wouldn't take long. Just like whatever Rina presented about our fund is very much similar to microfund that we are doing with pitchIN now. And indeed, we are the first microfund on pitchIN platform. And like Rina mentioned, we are the second in Malaysia to do that. So what are the difference between what we have on, on our own, and as well what we have on the microfund? Can I have next slide, Sharon? So the key difference is at the minimum investment amount. Actually, whoever that invests in this microfund campaign, you will still get the similar exposure to other big investors. But the big difference is the minimum investment amount has been lowered to 10,000 per investment. Typically, because VC falls under sophisticated investment, therefore only sophisticated investor can come in, and the size of investment typically about 250K to 500,000. But for the microfund, via pitchIN, you'll be able to receive fund below 250,000. That's why you put the minimum of 10,000 ringgit per investment. On the other structure, on the how will it work? The money will first go to pitchIN trustee account, and then be transferred to our special account, where we're gonna host all the fund that we raise from the microfund. I think that's about it. Is anything else, Shara, after this?
No, that's all.
Any other? We open for questions from the participant.
I think there is some questions.
Yes, please. Let me have a look at the questions. I saw that your minimum size 10,000. Can retail investor participate? This question, I think, just like I mentioned, because VC is is meant for sophisticated or sophisticated investor. There are definition of sophisticated investor where I think pitchIN team will be able to assist you guys on determining whether you fall under those group or not. Next question. Portfolio companies may lack in-house knowledge and expertise to create and live by ESG process. Who is the person in your team who can help them to set monitor specific ESG KPI? What do we do actually? Shara, can you go back to our investment process, Shara? Okay. To answer that question on the how do we plan to do? Actually, throughout our process, we have determined their ESG requirement for the company. So we have our own set of questionnaires. We'll be able to identify that. So during the due diligence, basically, we're gonna verify the gap, and then we already gonna have some plan on how we're gonna close the gap that they have on ESG. So when we monitor, basically we have set of parameters that we monitor, which will tie to their ESG performance as well. So it is a very structured approach. That is why if you look into our investment process, we divide it into 4 boxes. The 4 boxes represent 4 different phases of our ESG assessment. Initial screening, where my team will be listening and they put in their own scoring. And then when they come to the discovery stage, they will be given the questionnaires and they'll answer themselves. It's about 20 questions. And then during due diligence, we will verify the questions. And then during the legal arrangement, whatever not, we're gonna close the gap by putting something like condition precedents if they need to. And then during our monitoring, because we know very well about the gap, we have verified it. So it's a lot easier for us to monitor and to help them improve. Lina, you want to take the question about the exit strategy, Lina?
Sure. I guess you know, for the 2 companies, for Aclimo, definitely there is already 2 very clear strategy. One is, of course, the buy over from a conglomerate. Be rest assured that the moment when a VC invests in it, we already have some orchestration on our exit strategy. So you don't, as a VC, you don't invest and hope for things to happen. I always tell people the exit strategy is orchestrated. M&A, yes, we're talking to some local companies, some of the Tan Sris with fleets of transportation, logistic companies are looking at it. The other obvious exit would be a listing, you know, probably in a couple of years. While these are confidential, we can take it offline if you wish to know a little bit more, but we can only share if, of course, when the person is our LPs lah. But because we do work very closely with our LPs, strategic LPs, to actually help with the what do you call that, the investee company as well. So for Aclimo, to simply put it, I would say that we invested in the Intel of all EVs because Aclimo battery, while the first product that the company needs to showcase is a motorbike. In fact, the batteries of Aclimo, the BMS or where the patent is, right? You can see we can actually retrofit in cars, in van. In due time, I think we'll be able to share, you know, the projects that we are looking at are already in progress. But like, for example, the golf carts in some of the golf course in Penang, they are actually using Aclimo's battery. Moving towards green energy, we can create, you know, green energy from solar, from all this, right? But you still need a place to store the energy, and that's where the battery actually comes in. So, Aclimo batteries, you can actually retrofit in cars. So we are looking at a possible M&A or a trade sale to buyers in this industry. It doesn't have to be an EV company. It can be a logistic company. It can be a, you know, there's a whole supply chain of people coming. If you look at some of the news lately, 2 public listed companies also brought in motorbikes from China to basically, you know, sort of boost up their share price as well. So we definitely have you know, exit strategies for these companies. But remember, the exit strategy is not something the VC can force. So therefore, you know, working with the founding team is important because not many founders, if they're smart enough, unless they got diluted where they don't have a say, they still have, if they're still holding majorities, they do have a say on how they want to exit because some are purely financial. Some wants to retain it as a legacy. So I would say that, you know, there is no one, you know, recipe that fits all. we have to really work with the founders and also the market condition. Maybe to just add on to the first question on the ESG, of course, our first portfolio at Climo, there are, why I say triple bottom line, of course, we have a bike that is already for sale. If you're interested to buy, is just about 10K for entry. We are leasing it to corporations like Gentari, Post Malaysia, and other companies that needs to be ESG compliant. And of course, transportation is one of the culprit for excessive carbon emission. The second revenue is of course the battery life, and the third one is of course when we reach a volume of, let's say, 10,000 bikes on the road. For every EV, whether it's a Climo EV or brand ABC, technically they should save about 7 kg of CO2 for every 100 kilometer that they're on the road. Of course, we are targeting the delivery guys, which on our GPS, very hardworking Grab riders and food pandas, they are clogging about 200 to 250 km per day. So with that amount of carbon, CO2 that you can save, there is definitely a reason, for Climo to be able to trade the carbon when it comes. Of course, carbon trading is still at infancy at this point of time, although the recent announcement is that Bursa is looking at it. So we definitely, while we invest in a ESG compliant company, what Hidayah just mentioned is really on, evaluating if the company actually fits into whether the E and the S and the G part of it. Right. Next.
On the micro fund, I think why do we do micro fund? Actually, for Ficus, we think that micro fund enables more people to invest in venture capital and have opportunity to invest in venture capital, because we've been doing fundraising before this. All this while been meeting investors that can put in 500 to 1 million investment. So when the idea of microfund come about, I think it's a very good way to democratize VC investment as part of, to increase awareness and understanding of public, and as well as more sophisticated investor about investing in private markets in Malaysia. So that's why we do that. So, and we are fortunate that pitchIN would like to work with us on this. So that's on the microfund. So the next question, given the fund has already been launched from the timelines earlier, are the investors in microfund coming in as the same valuation as the early investors? The answer is yes. Because how it works, right? For fund, it doesn't work like you invest in company directly, whereby you have tier one, this round, second round, and whatnot. For fund, we have defined that we will be doing fundraising until September this year. So anyone that come in during the fundraising phase, they will get the same benefit as investing in other companies, in the earlier companies. So the difference is that because the later investor come in late, so for the next couple of new investment that we're gonna do, most of the fund will be taken from the new investor. So the early investor, they can keep their money and they don't have to contribute that much money. So this is where we call catch up in VC term. Catch up means the later investor will have to catch up with the early investor. But in terms of valuation, you'll get the same benefit as early investors with regard to Climo and Assembler. So it'll be no different valuation of that sort. All right. So Rina, you want to add anything, Rina?
there's I have no additional comment on this, but there is the question that mentioned about is our investment tied to the tech company invested? The answer is yes. If you invest in a VC, technically your 10,000 is you have a small stake in all the companies or the 15 companies that we invested in. So that's the difference. Of course, you can invest in other companies directly in pitchIN or other platform that is directly into the company. When you invest through a VC, you're investing in a portfolio company that Ficus SEA actually holds. So you will have, if you invest 10,000, a very small stake in Acclimo, a very small stake in Assembler, and the list goes on.
Okay. Next question on the condition approval needed for the fund extension if there are investment that cannot be exited within the fund life. Shariah, can you go to the fund feature page? Or okay, no, even one page after this. Okay, so just want to give everyone clear understanding how it works, right? The fund should be matured in 2028. However, should we not manage to sell the companies by 2028, we will seek for extension. How are we going to get extension? If you look into our offer document, there are, our constitution clearly stated there is advisory board. Advisory board will be represented by anchor LP and then independent and other rep from LPs. So we need to get approval from them in order for us to do extension. So we cannot simply extend as we wish, but it works both ways actually, because one thing very clear about VC, right? We cannot hold cash. So you look from 2025 to 2028, when we do divestment, whenever we divest any company, whenever we sell any company, the minute we get the money, within 2 weeks, we will return the money back to the investors. Because we cannot have cash. We are not like unit trust, whereby unit trust, they have some money market placement. We don't have that. So yes, in the event of we need extension, we'll ask for approval from advisory board. But whenever we have money, when we receive money from our sales of company, we'll return the money straight away to the investors. Next question, is our investment tied to the tech company invested? For example, since that one Rina answered already, right? Next question, how long has the Ficus team been working together? Now about 5 years, right? Yeah, 5 years.
We started talking about it in 2018, and the reason why we were interested is because at that time, YB UOB was lobbying for the tax incentive. Unfortunately, it took them 4 years to actually pass the law. So now, if you're investing as a corporate, you get the incentive upside as well. I think there's two distinct differences. Earlier on, Hidayat mentioned that as VC, we don't take the money, we don't put in capital market. That's why we cannot promise a dividend. I think there are many products outside in Malaysia that promises high dividend. But since we don't take the money that comes through the LP is actually within 48 hours is in the investee account. For those high net worth individuals that we earlier fundraised from, the commitment is minimum $1 million for individuals. When I say commitments, means we only draw down when we need to invest. So we don't hold your money, it's just commitment. But in terms of pitchIN, because the fund size is now 10,000, of course, the money goes into the pitchIN escrow account. It will be just administratively impossible to actually, go to so many people with 10,000. Hopefully, there are people who put in more to actually ask every time we invest. So that is the two distinct differences. between investing through pitchIN and investing through Ficus directly, but the quantum is much higher. Yeah.
Any other question? Any other questions?
Of course, Hidayat and myself were based in KL. So if you would like to see us face to face, we're happy to meet you guys. I think that's the most important thing to me if I were the investor.
Yeah.
Yeah. Zoom is cool for starter, but we're happy to meet you guys. And I think pitchIN has worked with our team to also organize some physical face-to-face event as well, or meeting session.
Yeah. And pitchIN team has somehow their line has been dropped off.
Oh, really?
Yeah. So
okay.
From the participant, any other questions? Please feel free to ask us. You're more than happy to. Yeah, Cynthia.
Oh, Cynthia is back. Yeah.
Yes, I'm back.
Yeah. So Cynthia,
Wi-Fi now.
Yeah, we have probably answered all the questions. Feel free to maybe share or contact with the participants if they want to, reach out directly to us or they want to meet us.
Yes, that's right. I think let me put this link in the group chat over here. Guys, Ficus is now live on pitchIN.
Okay, hi. So let me just take over. I think Cynthia has some connection issue. Okay, let's wrap up. I think that is all the questions that we had for Rina and Hidayat. Thank you, Rina and Hidayat, for joining us and pitch and answer all the questions that the potential investors have for Ficus Capital. So before we end the session, do you have any final message for your potential investors?
My final message is like, for Malaysia, we are moving towards more matured country with regard to investment. We have more opportunities on investing in private market. So whenever any investor want to try to dip in their fund into private market, it's either you use crowdfunding platform and invest direct in the company, or if you want to feel a bit safer, you can hire a professional fund manager like us to help you to find good deals for private companies, because our team will be doing scouting and nurturing day in, day out. So hope to see some of you to be one of our investor. Rina?
Well, I guess I echo what Hidayat says. There's no free lunch. So what we are presenting to you is really to hopefully, get more people to be aware of alternative investment. Whether you are an angel, if you don't invest in VC now, we hope you will invest as an angel investor, whether it's 2,500 or whatever amount in companies, so that you can help these founders commercialize their ideas. So I think it's a good way for us to also share. We were hoping that some startup actually listen, because they need to know how a VC think, right? In order for us to have a similar expectation, because there are many companies, many startups, many government agencies, accelerators, teaching startup how to raise money. But coming from a VC, how we look at companies is actually important, because if not, then the expectation will not match. Right?
Thank you.
Yeah, that's all from us.
Okay, thank you for the message, Rina and Hidayat, and thank you to you all who have tuned in and for your questions. We apologize for the Wi-Fi connection on our end. All the information on Ficus Capital is on our platform. Please log on as an investor at www.pitchin.my. On their campaign page, you may find out more information on their business tax, financials, and legal agreements under the pitchIN tab, where you could also make a pledge or reserve your investment. Do stay tuned to our Facebook posts and weekly newsletters for more updates. Until then, thank you for your support and stay safe. Bye.
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 Thank you. Bye.